Hi, and welcome to another daily recap. Today I'm going to recap October 30, 2024, Wednesday, and it's 26 of the road to 1 million funded. So, to summarize, I didn't get any trades on both EU as well as GU on this day. So, let's jump into whiteboard and see what happened today. But before that, let's check the fundamentals quickly. So, at because of this euro high, the price was fluctuating throughout the day, and because of this 12:15 and 12:30 high impact news, there you can see some rapid movements in the price at this time. So the thing is not to be worried of these high impact news, but you must make sure that you adhere to the prop firm rules during trading the news. So let's jump into whiteboard and see what happened on this day. So in the euro dollar, the swing structure is bullish, internal is bearish, and this is just to get the overall view. But the main thing is the current price action. What the current price action is doing. Currently, the price action is consolidating. Neglect these two marks because this is wrongly marked. So if you see, the price actually took this. The price actually took the sell side liquidity right here, and now it can target the buy side liquidity, which is right here. So that's why I mark this as weak high and this has the strong low. But the thing here is price can also come down to take out this daily target. So but the overall idea is price can take out this buy side liquidity. Price took the sell side liquidity below the Monday's low. This is Monday's low. Thus, you can expect the price to be bullish for the rest of the week as the price has swept the daily sell side liquidity and mitigated the daily demand. So, what are the confluences for the price to being, bullish today? Price took the sell side liquidity right here, and it tapped into the demand zone, and it took out the Monday's low, and now it can push up to take out the, distribute bullish throughout the week. So that's why I mentioned, demand mitigation, sell side liquidity sweep, and the week high. So moving on to the 4-hour chart, now you can see the pullbacks, all those tiny, tiny pullbacks which were absent in the daily charts. Now you can see them all. Let's zoom. Okay, the swing structure is bearish, internal is bearish. So the swing pullback is being anticipated since the price has mitigated into the daily demand zone. So this is the daily target, and okay. Price has swept this sell side liquidity, and then it is about to make the chalk bullish. If the price chalks bullish, then this POI in this large demand zone would be holding, and it can push the price up and to take out this buy side liquidity, which I mentioned in the daily chart. So that's the idea today. Expecting the price to come all the way down is not possible because price can be eager to take out this buy side liquidity. So it can make a short pullback. I must be able to capture that pullback and then take longs so that I can trade in line with the market to which can take out this buy side liquidity. So this is the week as it did not take out the low. Yeah, I think mentioned the week high because it right here. This high failed to take out this low and it just liquidated it and it is about to chalk bullish. If the chalk bullish is confirmed, then this becomes a down weak low and it's high probable that it can be taken out. So this demand becomes valid when the price chalks bullish and it becomes high probability where the next high low can be found. Only if it chalks bullish. So this is H1. Here you can see that this is the strong low, this is the weak high. And yeah, let's zoom in. Okay, the swing structure is actually bearish and the internal is consolidative. But what I can say is the internal is bullish. So this would become the weak internal high. This would become the strong internal low. But the internal structure is consolidative. If I zoom in, I can see that this whole thing becomes the 4-hour POI. And what I can expect is price can take out some sell side liquidity, probably the Asian lows. And then if it can chalks bullish, then I'll be happy to enter from this POI targeting the buy side liquidity. Or even if the price continues to be bearish, this is a flip zone. So this entire thing would be the flip zone. I can look to target this flip zone and then boom, target the buy side liquidity above. So can look to follow the bullish momentum till the price takes out the 4-hour buy side liquidity. And for longs, I need to see the price chalk bullish, and then I can trade. Sorry, for shorts, I need to see the price take out this buy side liquidity and then chalk bearish. So from this POI, I can look for shorts targeting the Asian lows and those kind of time based liquidity. Moving on, price didn't give me a chance to enter, so I was not able to enter this trade. Actually, price flipped right here. So once the price flipped it, I expected a pullback towards this demand zone, which I didn't get it, and the price took the buy side liquidity before it can make the pullback. So what I can do now is simple: wait for the pullback. I mean, wait for the price to chalk bearish and take the and play shorts. And that happened. Price took the buy side liquidity above this high, buy side liquidity above this high, and it actually chalked bearish. Here is the chalk bearish. So this is the POI, high probability POI that I'm expecting the price to mitigate and then push the price down. So these are the criteria. This is phase B trade. Why it's called phase B? Because it is pro fractal, pro swing, but it is counter internal. That's why it's called phase B. I'll show you the swing structure once again. Yeah, here it is. It is no, it is in line with the swing structure, but it is counter to the internal structure. Internal structure is bullish. This is the internal structure here. This is the internal structure. Internal structure is bullish, whereas the swing structure is bearish. Now the fractal structure is also bearish. The fractal structure represents the current session direction. So eh, it's it's worth listening. You need at least two uh, time frames in your favor to take the trade, to take a high probability trade. In this case, I have the swing structure and the fractal structure in my uh, on my side. So it's phase B. Oh, high time frame supporting the medium time frame idea? No, because the daily suggests me to the daily is seeing that it is going to take out the buy side liquidity above. So probably not. And 4 hour is also bullish because it has made a sell side liquidity sweep and a bullish momentum. So definitely the high time frame is not in my side, but the session direction is in my side. So price is in the OT because just now this is the first phase B chalk. It is in line with the medium time frame order flow and POI 4 out of 8 criteria met. These are the criteria that has been met. So it's a very high probability POI. What are the other confluences? There is no opposing demand zone and there is ample time based liquidity to target New York low. And this is also the previous day's low. And it has swept the previous day's high. And this previous day high is also the previous week's high. So buy side liquidity swept. So it will target the sell side liquidity. So previous week high is a large buy side liquidity pool. So it will target a major sell side liquidity. Obviously, something like the sell side liquidity below this for our demand zone. What's the risk factor? Against the high time frame bias, and it is counter internal. So the risk is on, trade is also on. The lid and the entry method is LC1 using M15 lid, and perfectly the lid was set up. And coming to the end of the session, price actually took out this lid. I expected I placed my trade here. It got invalidated. Again, I chased it down, placed it here, got invalidated. I placed it here, got invalidated. And coming to the end of the session, this was the last candle. So I was not interested in this candle. So I just ended the session. So price never tagged me into the trade and there is no trading opportunity today. It is what it is. Sometimes it happens, sometimes it doesn't. So this time it didn't happen. So I was happy to leave the desk without any trades. So in GU, the same thing happened, but in a slightly different price action. So let's jump into GU and see what happened on this day. This is the daily chart of the GU. The swing structure is bullish, internal is bearish, and the supply chain is holding. So price has already mitigated the daily supply, and this is a kind of low resistance liquidity. And with the unmitigated demand below, there is all the possibilities for the price to come down because supply mitigation, demand below, sell side low resistance liquidity, internal structure is bearish, supply is holding, lot of confluences you can tell. So jumping into the 4-hour chart, this is the zoomed in version of the daily where you can find some more interesting details. The supply still holding. I'll assume the daily bias as bearish, wanting to mitigate the daily demand. Price did not react off from the demand zone. So this questions me whether price can continue the bullish momentum or price can come down to mitigate the demand and then push further up. Because price hasn't reacted from anything or from this fair value gap. Probably there would be ton of sell side liquidities below. People would trade from fair value gaps, right? So to trap all those early buyers, sell side liquidity would be in G, and all those stop losses would be below here, and those stop losses would be triggered, and price would actually mitigate into the actual demand zone, and then it can push up. But the question is, sometimes price can respect the fair value gap, and it can push up. So the thing is, you must be consistent and must follow either any one of the uh, price distribution arrays. Either it can be a fair value gap, either it can be a breakup block, or it can be supply and demand like I follow, or it can be uh, I don't know. There are a lot of things that can be described by Michael, but I follow only supply and demand. So this is 4-hour chart, and you can see the details here. The swing structure is bearish. Also internal is bullish. So let's zoom in to see the details. Yeah, I can continue. Price with the buy side liquidity and mitigated the 4-hour supply. Thus, I can look to play the phase B shorts, keeping in mind that this would be a riskier trade as the price did not reach the premium prices. So why I was satisfied to take the phase B shorts? I'm not expecting the price to go all the way up. It's not valid. You know, price can go for until this pull back and then push down. Then this will become the new swing high. I'm not expecting the price to push deep into this swing range and then push down because this breakaway gap creates a separation between this price action and this price action. I'm not expecting the price to go all the way up, and this swing range seems valid for me. So that's why I'm expecting the price to tap into this supply and then push down. I can continue to target the 4-hour buy side liquidity if price takes some sell side liquidity below the low time sell side liquidity below the low time frame demand and gives me a good medium time frame shift to take longs. Okay, price can go up, take out this buy side liquidity, right? So this is part of the game plan. That it is bullish because of the demand chain, internal order flow, and buy side liquidity above. So price can go up and take out this buy side liquidity. Sorry, price needs to go, or price can, use this buy side liquidity and take out the sell side liquidities below, all the sell side liquidities below. Any of these two things can happen, but I just focus on the current market structure. The current market structure is bullish. So I am expecting the price to be bullish, continue to take buy side liquidities. So since the price has taken some sell side liquidity, it must now take some buy side sell side liquidity, and that sell side liquidity can be a lower time frame sell side liquidity, like the H1. That's what I have mentioned here. This is the H1 swing structure. Swing structure is bearish, internal is bullish, and this is the lower time frame sell side liquidity that I was talking about. The sell side liquidity can be either structural or time based. So in this case, the time based liquidity is the Asian lows, which can be taken out. High time frame bias is partially bullish and partially bearish. Thus, I can follow the bullish order flow till I get a strong bearish shift, indicating that the price can come down. I can also why I wrote this point because I was confused whether to take the phase B shorts or continue the phase C longs. For this, I wrote this point. What I'm saying is I can look for longs and not expect and take shorts only if the price makes a sufficient bearish shift. For longs, I need to see the price take some sell-side liquidity, as I mentioned earlier itself, to mitigate the 4-hour demand and chalk bullish. Thus, I can take longs targeting the 4-hour buy-side liquidity above. Ideally, I'm expecting the price to come, take out the sell-side liquidity, chalk bullish, and boom, boom, boom. That's what I was expecting. I can also look to play the phase B shorts if the price takes out the Asian highs and chalk bearish. Then my first target would be Asian lows and H1 sell-side liquidity. So one more case that I'm explaining here is price can make a pullback, right? A deeper internal pullback. So in that case, what I'm expecting is some time-based liquidity to be swept and then chalk bullish and then deeper internal pullback, mitigate the extreme H1 sub demand, and then price can push up. I can play this shorts also. This is a bit zoomed in version for your reference, but the zoomed out version itself is sufficient for you to understand. So as expected, price chalk bullish, but the question here is, has the price already took some sell side liquidity? So is this sell side liquidity enough for the price to push up and take out the buy side liquidity above? So that was the question. So if that's the case, then price will not form a chalk bearish. So and this was confirmed with the second candle. The first candle actually liquidated it, and there was the chalk was not confirmed, but the second candle took out this candle's high, which means that the bullish present, the market is currently bullish, and I'm looking to take longs. This is phase C. Target is this 4-hour buy side liquidity. In OT, no. High time frame supporting, yes. Partial. Medium time frame with 4 out of 8 criteria met, yes. Line with the medium time frame order flow, yeah. And what are the other confluences? Supply, uh, the demand chain is getting respected, and there is no opposing supply zones because the only supply zone is 4-hour chart, the 4-hour supply, and it was formed long back ago as a structural liquidity target, 4-hour buy side liquidity. What are the risk factors? Asian low has been not yet taken, and price is still in the 4-hour supply. And the entry method is very clear. It is M15 LC1 with M15 lead, so it's very clear. But unfortunately, price took out the Asian ice and boom, it chopped bearish. At 932, price chopped bearish. So this became the breakup block which I can use to take shots. At 1114, I can see that the price rallied down. So I thought the Neo could never come all the way up and then give me a short trade. But it did come. We You can't expect anything from the price, but sometimes it shows you the real face. So this is phase A, but yeah, this is phase A. High time frame supporting the medium time frame idea. The POI is good. It is in line with the medium time frame order flow, and it is in OT. These are the POI criteria. Other confluences swept Asian high. No opposing supply and demand zones because this is the only demand zone, but this has not caused any break of structure. So if this causes a break of structure, then this trade would be invalid. As a structural, I mean, structural liquidity to target. This is the weak internal low. Now this becomes an bearish high boss, and this becomes a strong internal high, and this becomes the weak internal low. This was 1411. This is the lid. I was taken, place the trade here, stop loss just above, all set, but price invalidated the POI, so I need to cancel the trade. And it was already 1414. So three more candles, and I was not expecting anything from the market, so the trade idea got invalidated. So I just left the desk. So yeah, that's how I didn't get any trades on this day. It was a pretty good session, but not everything happens in my favor all the day. Sometimes it may happen, sometimes it may not. In this case, it didn't happen. So the best thing is sit on the sidelines, don't lose your money, and wait for the right opportunity to execute your strategy. So that's it from my side. See you tomorrow. Until then, cheers, guys. Bye.